Millennial and Gen Zs, this is Andrea Bobkowicz, and I have a rule of thumb for you on RSPs and tax-free savings accounts. I've been in the business for 25 years now, and I want to tell you that I have some great information for you, and I realize my experience and my age, I know beauty and experience doesn't really cut it for you guys, but I'm telling you, I'm bringing it to the table. I'm here to tell you about 3 different areas that the government has given you opportunities to actually exponentially grow your money. Number 1, RSPs. Number 2, tax-free savings account. And number 3, defined contribution plans. So let's start with the first one. You have RSPs and tax-free savings accounts. 2 very important things you need to know about these guys. Number 1, all money that you could put into this plan is cumulative. All cumulative money that you put into an RSP or tax-free savings account, if you are not able to put the money in that particular year, it just accumulates year over year. So if you're not able to do it, don't worry about it. It accumulates, and that actually is the biggest benefit you could possibly have. The government rewards RSP contributions with a tax credit. So every dollar you put in, they're able to give you back your marginal tax rate. Bottom line is, every dollar in, you get your tax money back. This is a big advantage for you guys, but I'm not actually recommending you do that, particularly at this point in your career. Tax-free savings account are different. You could put money into the tax-free savings account, only $5,500 a year, 18 years and older, and it grows tax-free. RSP also grows tax-free, but in the tax-free savings account, you don't get the tax credit. Here's the rule of thumb, the big one, here it comes. If you're earning $45,000 or less, do not put the money in the RSP. This is not advantageous to you. You're going to get a tax credit of less than 30%, and the money's locked in for life. So here's the big deal. In an RSP, the money going in is tax deferral. Tax deferral just means you're paying money at the back end. In a tax-free savings account, money going in, no tax going out. So this is money that can grow tax-free for you at any time. So money in, money out, tax-free the entire time. RSP, because you get the tax credit going in, you get tax going out. So that tax credit has to be really meaty and worth your while. When you earn above $45,000, even $90,000, remember I told you earlier, all those cumulative earnings that have been accumulating all that time, that's when you want to put money into your RSP. If you've accumulated a lot in your tax-free savings account, you can actually transfer that as a lump sum into your RSP and get a nice tax credit. You should know something about tax-free savings account. Little special sauce. If you take that money out of your tax-free savings account and roll it into your RSP, as I suggested, get a nice tax credit back, you can actually replenish your tax-free savings account in the next tax year. It's a really flexible system. So I highly encourage you to do that. So for example, let's say for the last 3 years, you've been putting money into your tax-free savings account, $16,500. You take it, you dump it into your RSP. When you're earning over $45,000 a year, you get your tax credit back. The next tax year, you could put back $16,500 plus your $5,500 a year. So the tax-free is very flexible and you can use it to your advantage. Oh, here's another good one. Always say yes to free money. That's the 3rd one of my list. We've talked about RSPs, tax-frees. Here's the last one. Defined contribution plan. If you work for a company and they're offering you a defined contribution plan, very often it's an incentive to give you free money. Always say yes. So I'm telling you no to RSPs. In this case, I say yes. So basically the company says you put 5% in the plan, they'll match it by 50%, they'll give you 2.5%. Say yes. This is a nice way to grow your assets. It's really worth your while. Here's the information. RSP maximum limit is 18%. Tax-free savings account limit is $5,500. This is for 18 and over. In the end, what I want to tell you is there is one final thing you can do to take money out tax-free from your RSP, and this is for you young millennials and Gen Zs, is you can buy your home. There is a first-time home buyer's plan that exists out there, $25,000 you could take out of your RSP. Call me, find me. Look on Google, Andrea Bobkowicz. Hope you enjoyed it and tune in again for more strategies to keep you wealthy.